أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم والصلاة والسلام على رسوله النبي الكريم وعلى آله وصحبه أجمعين. Assalamu alaikum and welcome to all the participants and listeners of today's webinar. The first ever webinar conducted by TAIF Digital Institute. The title of today's webinar is Doing Business the Sharia Compliant Way. In terms of brief introduction to TAIF Digital Institute, we are a digital learning institute focusing on enhancing and developing resources, manpower, and providing digital learning solution to Islamic banks and Islamic finance. Our objective is to enlighten the life of people by offering the Islamic finance as an alternative, ethical and equitable solution to the masses, and to enhance and take the knowledge of Islamic finance to every nook and corner of the world by digitalizing it and by making it available to all. Our presenter today, Sheikh Mufti Ismail Desai, does not require any introduction. He is a very well-known name in Islamic finance and considered authority on the subject. He has been on Sharia advisory board of different Islamic financial institutions and has written several books and articles on the subject. He is also on the Sharia advisory board of TAIF Digital Institute. With this, Sheikh, I hand over the mic to you. Thank you very much for being us. Sheikh is just as an reminder, Sheikh is joining us from Durban, South Africa. Assalamu alaikum, Sheikh. The mic is yours.
بسم الله الرحمن الرحيم نحمده ونصلي ونسلم على رسوله الكريم أما بعد. قال الله تبارك وتعالى في القرآن المجيد والفرقان الحميد بعد أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم يا أيها الذين آمنوا اتقوا الله وذروا ما بقي من الربا إن كنتم مؤمنين. وقال رسول الله صلى الله عليه وسلم في حديث طلب كسب الحلال فريضة بعد الفريضة أو كما قال رسول الله صلى الله عليه وسلم. All praise belongs to Allah Tabaraka wa Ta'ala, the Master and Sustainer of the universe. May peace and blessings be upon Muhammad sallallahu alaihi wasallam, the last and final messenger of Allah. Respected management of TAIF Digital Institute, brothers and sisters in Islam, Assalamu alaikum wa rahmatullahi wa barakatuh. I would firstly like to take this opportunity to express my gratitude and shukriya to the senior management of TAIF for undertaking to promote this wonderful event and allowing me this opportunity to present to you. It is also indeed heartwarming to note your enthusiasm and passion to understand and gain knowledge on this vast field of Islamic economics, finance and banking. May Allah subhanahu wa ta'ala accept all of your sincere efforts and grant us His ultimate ridwan and pleasure. Ameen. Today's discourse would cover several aspects, and as per the promotional material that you have been exposed to, we would undertake to provide guidance around several topics and essential fundamentals on Islamic economics, banking and finance. We move over to the first slide around Islamic finance and conventional finance. And before we move over to the first slide, I would like to provide a quick background and introduction to the importance of Sharia compliance and why our business dealings need to be Sharia compliant. Islam is a religion of balance, justice, and equity. The entire religion of Islam is based on these tenets. If a person has balance, justice and equity in one of the tenets and fundamental pillars of Islam, and does not have balance, justice and equity in another tenet of a fundamental in Islam. For example, if one's ibadat is perfect, but one's muamalat, one's financial dealings are not Sharia compliant, then one's deen would not be complete. There would therefore be an imbalance in one's deen. So every person has been accorded a particular right. And for example, when it comes to muasharat and social dealings, if the father has more rights or the children has more rights than the parents, then there would be an imbalance. If the relatives have more rights over the children than the parents, then there would be an imbalance in this just and equitable social system. So Islam is a religion of balance, justice and equity. In the hadith which I've quoted before you, Rasulullah ﷺ says that to seek a halal income is an obligation after an obligation. So in other words, that just as it is fard to perform salah, hajj, zakat, etc., equally important it is to ensure that one's dealings are Sharia compliant. I would like to provide 3 examples of the importance of Sharia compliance. There are 2 children. One child is legitimate and the other child is illegitimate. There are 2 chickens. Both chickens have white feathers, they have feet, they have a beak, etc. But why is it that one is halal and one is haram? It is because that one was slaughtered with the name of Allah and the other was slaughtered without the name of Allah. There are 2 foundations. One foundation is weak, one foundation is strong. One building collapses, the other building does not collapse. So therefore, it is not the end result that matters, but it is the methodology that is used or the process that is used to gain the end result. And this is why we often hear that Islamic finance, banking, economics is only smoke and screen, or it is smoke and mirrors, and it is closely resembles a conventional product. Yes, the end result is the same. There are 2 people. One person wants to buy a house, the other person wants to buy the same house. But why is it that the financing mechanism of one is Sharia compliant and the other is non-compliant? It is because one person purchased the house from a bank and would pay them back in installments with the profit markup, and the other basically took a conventional HB or mortgage on an interest basis, and therefore the financing arrangement was non-compliant. In fact, Sharia compliance is so important that when Rasulullah ﷺ ascended the 7 heavens to Allah subhanahu wa ta'ala and the tashahhud was revealed, so 3 du'as were made by Rasulullah ﷺ when greeting Allah subhanahu wa ta'ala, and upon each du'a, Ameen was said to those du'as. That is, Assalamu alayka ayyuhan nabi wa rahmatullahi wa barakatuh. That upon each du'a, that is, that, oh Allah, my monetary worship is for you, Allah subhanahu wa ta'ala guarantees that there will be barakah and blessings in such a person's financial dealings. So imagine, Allama Sayyid Tahtawi rahimahullah, a famous scholar, says that this is a guarantee that there will be barakah for such a person whose financial dealings are only for Allah subhanahu wa ta'ala. So in other words, if one's financial dealings are Sharia compliant, then Allah subhanahu wa ta'ala guarantees barakah for such a person. And imagine that we recite the tashahhud 17 times daily. So Allah subhanahu wa ta'ala guarantees barakah and blessings for one's financial dealings if they are Sharia compliant 17 times daily. The importance of Sharia compliance can never be understated. And in fact, one of the last verses to be revealed was with regards to Sharia compliance, and where Allah subhanahu wa ta'ala says, Ya ayyuhalladhina amanu, idha tadayantum bidain ila ajalin musamman faktum. That if you take out a debt, then make sure you document that debt. So in other words, that one of the last verses to be revealed, according to some Mufassirin and scholars of Tafsir, whether it's 9 days or 31 days before the Mubarak death and passing away of Rasulullah sallallahu alaihi wasallam, this verse was revealed to show us the importance of ensuring that our dealings are documented, to show us the importance of Sharia compliance. There was one Sahabi, he had achieved a great deal of success in selling wine and liquor. And while he was in the lands of Sham and what is called the Levant, he heard of the prohibition of wine and liquor, and immediately he forewent all of the revenue of his entire business. So this is how we should be. That is, the moment we know that something is not Sharia compliant, and we take advice from a reputable scholar, that is, can we be prepared to forego any benefits, financial benefits, like the Sahaba radiallahu ta'ala anhum, the moment they heard that something was not compliant or impermissible, that they completely forewent it. I would like to terminate this first portion or segment of today's discourse in terms of a hadith in which Rasulullah sallallahu alaihi wasallam says that there is one person who is ash'ath. He is fully covered in dust. He is completely disheveled, and then he raises up his hands in dua to Allah subhanahu wa ta'ala. Then the hadith says, "Anna yustajabu lahu ad-du'a wa mat'amuhu haram wa mashrabuhu haram wa ma'kaluhu haram." How can such a person's dua be accepted? How can such a person's prayer be accepted when his eating is haram, his drinking is haram, and his clothing is also haram? So in other words, he was replenished. His earnings were not Sharia compliant. So how can such a person's dua be accepted? So therefore, all of this explains the importance of Sharia compliance in one's financial dealings. In one hadith also, Rasulullah sallallahu alaihi wasallam says, "Kullu lahmin nabata min suhtin," that every piece of flesh that was nourished with haram, that is through non-permissible earnings, then such a person, that flesh becomes haram for Jannah. So that piece of flesh will never be able to enter Jannah and paradise. So with that, we terminate the first segment in terms of the importance of Sharia compliance. We now move over very quickly to the early history of Islamic finance, and we provide a basic synopsis in terms of the development and the early history of Islamic finance. So Islamic finance was established during the era of Rasulullah sallallahu alaihi wasallam, and you had various elements like the Sayarifa, or the money exchanges. You had the Baytul Mal, the public treasury. You had the public sector, zakat, ashab Sukuk, which refers to the public monitors. And from there onwards, right up to the early 1900s, you find that there was a major lack of development of the Islamic economic system, and that was primarily due to imperialism and colonialism that took hold over the Muslim countries, and they could not therefore develop an Islamic economic system. So we find that in the early 1970s, that the Dubai Islamic Bank was launched. In the early 1960s, what is called, or the first example of Islamic finance and banking, is the Mudarabal savings project in the Upper Nile area of Egypt, or the northern part of Egypt, in the Upper Nile Valley, where you had these rural peasants and farmers that wanted to collect funds and earn a Sharia compliant return. So they then pooled their funds together and they would earn a Sharia compliant return. That Mudarabal savings project, which started off with a good niyyah and intention to develop a Sharia compliant project, then transformed into what is today called the Faisal Bank, which is the official or an official state bank, Islamic bank of the government of Egypt. But this was established in Egypt. The Islamic capital market was then developed in the early 1950s, and we have perhaps the first example of a Sukuk, or an Islamic bond, issued by the Ottoman Empire in 1885. Lastly, as per point 7, you will find that one of the earliest examples of an Islamic fund or Islamic financial instrument as an investment fund is the Tabung Haji Fund, which was put together by the Malaysian state to guarantee their citizens going for Hajj, etc. And you'll find various buildings in Madinah Munawwara and in the Holy Lands that have the name Tabung Haji. So Tabung Haji was developed as an Islamic savings vehicle for pilgrims to go for Hajj. The next slide basically shows a diagram of the development of Islamic finance. As you can see, that in the early 1970s, 1980s, you had basic products being developed, and you have in the early 2000s, you have more advanced products. Now you have much more sophisticated products like an ISDA, Master Tahawud agreement, for leveraged finance. You have Sharia compliant profit trade swaps, etc. So what are the sources of guidance for Islamic finance? That would include primarily 4 sources, that is the Quran, the Sunnah, Ijma, which is consensus, and Qiyas, which refers to analogy. And then you have Ijtihad, where there are certain contemporary issues now that were not discussed previously. Like an example of this is, performing Salah in the aeroplane, etc. We move over to the next slide. This shows you a brief synopsis of a Sharia structure. As you can see that you have the Quran and Sunnah, Fiqh al-Mu'amalat, and then you have the application by the Sharia board, which is essentially an organization as a committee that then is responsible for ensuring that the operations of an Islamic bank are Sharia compliant. And another important point is that the mindset also has to be Sharia compliant. So if one engages in developing an Islamic bank or an Islamic financial institution, one should ensure that the mindset is also Islamic. What is the definition of Islamic banking? It is essentially, banking in consonance with Islamic laws. It is governed by Sharia law. And a fundamental point is that money has no intrinsic utility. And perhaps one of the earliest scholars who have documented that money is not a store of value is Imam Ghazali rahimahullah, who has mentioned very clearly that money is just a medium of exchange. It has no intrinsic utility, and it is merely for facilitating transactions. We move over to the next slide. And this slide basically discusses, the requirements of Islamic finance. That is, it is asset-backed. There's a prohibition of interest, a prohibition of certain activities. There's a prohibition of uncertainty, like, for example, in life insurance. And there's profit and loss sharing, in certain transactions like Madaraba, etc. We move over to the next slide. Basically, this slide discusses, some of the fundamental tenets of Islamic finance, like the prohibition of interest, the prohibition of gharar, which is speculative behavior. And one of the major differences, as you can see towards the end of the slide, is that Islamic finance is backed by real assets or services. So in other words, that there is actual value creation when it comes to Islamic banking. We move over to the next slide. So interest basically creates an artificial money supply, which is not asset-based, which results in inflation, volatility, and the concentration of wealth in the hands of the rich. So the essential maxim in Islamic finance is what is called, and based per the hadith, which says al-ghunmu bil-ghurmi, or the other way around is also recorded in the hadith, al-ghunmu bil-ghurmi. In other words, that you can only take a benefit when there's risk. If there's no risk, then you can't take a benefit. So this is the source of Islamic banking products. In other words, Mudaraba, Musharaka, partnership. However, there are other products based on Murabaha, etc. We move over to the next slide. A simple example of some of the fundamentals between Islamic finance and banking is basically as follows. John, runs a mining company. He requires financing, so he would take out a normal standard loan at a 15% interest rate, and he would end up paying a hefty sum. So whether or not he makes a profit or loss, the bank doesn't care. But however, when it comes to Islamic finance, Islamic bank would propose a Mudaraba contract where John would be the working partner or sweat partner, and the Islamic bank would basically be the financier. So they would agree on a fixed profit share as a percentage, and then the profits would then be distributed. Other examples of this include an example of sovereign debt, where there is a country, let's say the UAE government, that requires funding to fund infrastructure projects like roads, etc. So in that case, a Sharia compliant structure would then be structured, and on that basis, the government would then be able to source funding on more lucrative terms. The next slide. Some of the general Sharia guidelines, obviously, as we've alluded to, is that all transactions should conform with Islamic law. There is a prohibition of interest, prohibition of gambling, and there's a sharing of risk between the parties. The next slide. So this is a snapshot of an Islamic bank. As you can see that the deposits either based on Mudaraba or Wadiya or trust. And then you have the shareholders that pool funds together, and those funds are then used for Islamic treasury services or money market accounts, Islamic investments, and Islamic financing products. Next slide. So we'd now like to go to the next section of today's discussion, and that is some of the basic and fundamental concepts of Islamic finance and banking. Essentially, there are four basic categories from a conventional perspective, that is equity-based, trading-based, lease-based, and debt-based. But from an Islamic perspective, there are only three bases or broad categories. That is an equity-based transaction, a trading-based transaction, and a lease-based transaction. We'll go through these concepts very quickly. So the first concept that we'd like to discuss is musharaka. So musharaka refers to an equity-based transaction where two or more parties pool their capital together, and the profits are shared based on an agreement, but loss is based on capital contribution ratio. So remember that the loss is based on capital contribution ratio, and you cannot fix the profit as a fixed number. Yes, you can fix the profit as a fixed percentage, and all mechanisms should be introduced before the initiation of the partnership. What we've seen before in the past is that unfortunately two brothers get together or several brothers get together, they form a partnership, but there's no documentation. And then they come to us as scholars to dispute the issues, and we find that there's no documentation. So in other words, it then becomes an issue of he said, and she said. So remember that in today's times, it's extremely important for one to document one's agreements in a Sharia compliant manner, seek advice from the scholars. This here is an example or a snapshot of how a musharaka is. So you have the partner A that contributes to a venture, partner B that also contributes to a venture. The profit is shared according to an agreed ratio, and the loss is based only on the capital ratio. So let's say if partner B contributes 50%, partner A contributes 50%. So the loss will be shared based on their contribution ratio only. The next slide is what is called a Madaraba or musharaka, which is modern application in terms of how musharaka is applied in the modern sense. So musharaka is applied in the modern sense by having a diminishing musharaka facility where the home finance is done on a diminishing musharaka where the bank partners with the client, and then the client slowly buys out the bank shares. So this is also an example of a modern concept of diminishing musharaka. So you can see here that the client and bank purchases the asset together, right? And the bank essentially sells its shareholding to the client over a fixed term. Right? So this is an example of a diminishing musharaka. Some of the most pertinent matters with regards to musharaka is in terms of the dispute resolution. What we found is instead of spending a lot of money, time and resources in going to the courts, that there should be a mid-up clause. So in other words, that if there's any issues, then it should be mediated by an appointed mediator or an arbitrator. So in that instance, both the parties save a lot of money, but they can also resolve the issues and move forward. So the next slide discusses Madaraba, which is basically refers to a sweat partnership. So a sweat partnership where one party contributes the capital and the other party contributes his management expertise. So in this case, the only difference between this and musharaka is that if there is any loss, then the loss is covered fully by the financier or the investor. And Mudaraba has been called different words like muqarada. There is a reference to Mudaraba by one of the early European religious leaders that stated that their followers should follow what is called a mukhatara contract. So mukhatara contract essentially refers to the similar thing as a Mudaraba contract, as the sweat partnership. So in other words, this shows the importance of a Sharia compliant sweat partnership. That is, this was also recognized also by non-Muslims many, many centuries ago. The next slide basically demonstrates an example of how a Mudaraba will work. So essentially, you'll have the financier that will provide the capital, the Mudarib that provides his or her services, and if there is a loss, then the Mudarib only loses his services, and the Rabbul Mal takes all of the monetary loss. And the profit then is based on a fixed profit ratio. Move over to the next slide. In terms of Mudaraba, how is Mudaraba commonly applied? Where you have an Islamic bank that will offer a certificate of deposit and deposit account facilities on the basis of Mudaraba. These rates or return on investment or ROI is not fixed or guaranteed. It is based on a an estimated return on investment. Some of the common products include a private equity fund, a Madaraba deposit account facility, etc. We now move over to one of the most common Islamic banking products called a Murabaha. So Murabaha refers to cost plus financing, where the buyer is aware of the cost price. Now, the scholars have mentioned now that there are 48 different methods or concepts under which an agreement can take place. So if Muhammad gives a pen to Yusuf, there could be 48 different ways or Sharia concepts under which that simple agreement or that simple action could have taken place. It could be, wadiya, it could be an amanat, it could be arahan, it could be, musharaka, mudaraba, it could be a murabaha, it could be a tawliya, it could be, musawama, it could be ta'ati. There are different concepts now in Sharia under which that simple action could have taken place. So one of them is murabaha, where a person purchases an item and reveals the cost price to the buyer. So murabaha is basically one of the most commonly used products in Islamic banking, where, for example, if you require financing for shipment from China, for example, you don't have the finance, the bank would then pay the supplier and charge you a markup on that. That would be based on a murabaha. So in other words, this is actual trading. It's not a loan. It's not an interest. It's not an interest on a loan, because the bank is actually purchasing the product and selling it to you at a markup. So that is essentially a murabaha. We move over to the next slide. So this is an example of a murabaha where the customer needs to purchase goods. He doesn't have the capital. The bank then purchases the goods on behalf of the customer and sells it to the customer for a fixed markup over a term. Next slide. A financial model of how a murabaha would work is the customer approaches the bank to finance 100 tons of wheat. The bank will conduct its audit and then approves the facility. The supplier will invoice the bank and the bank will pay. The bank will then appoint an agent, which is generally the customer, to receive the goods, and the bank then sells the goods to the customer for a fixed markup over a term. Next slide. So this is a snapshot of how a murabaha would work, in the sense that you would find that the supplier would supply the goods to the bank would then sell it on to the client, which is the bank's client, and then the client would eventually sell it to the buyer for a profit. Next slide. This is a very clear very clear diagram and an example of the difference between a conventional and Islamic bank. So on the conventional side, you can see it's amount financed. You have the interest rate, right, which can also be a floating rate. But on the Islamic banking side, it's a fixed purchase price, there are installments, and there is a selling price. So everything is fixed upfront. Next slide. So the next concept that we quickly go into is called ijara. Ijara refers to Islamic leasing. There are different forms of ijara, ijaratul a'mal, ijaratul manafi. Basically, the two forms of ijara refer to where either a person leases or purchases a usufruct of an asset. Where, for example, a person owns a home, a person owns an asset, he then leases that asset out for a fixed fee. This is called ijara or leasing. And the second is where a person leases or is hired by an employee for his services. The person is an employee working for an employer. He gets paid a fixed salary or a wage. That is also one form of ijara called ijaratul a'mal. So there are two forms of ijara. One of the most common applications of ijara is in vehicle financing or asset financing. Next slide. So this is a snapshot of how an ijara would work. Basically, you would find that the bank would purchase the asset and then lease it on to the client for a fixed tenure, and at the end of the term, either the client gives the asset to the client or sells it to the client for a balloon payment. This is what is called commonly as an ijara wa iqtina, or it is also called a diminishing ijara contract. Next slide. So in terms of an Islamic banking perspective, vehicle finance is generally done under the concept of ijara bil iqtina. There's also a diminishing ijara. Another important point is that the risk, as per point 8, the risk of loss sits with the lessor in the ijara, because the daman or the liability of the asset remains with the lessor, not with the lessee. And the ownership also sits with the lessor, because, as I said, that the risk stays with the lessor, not the lessee. Next slide. Another contemporary concept in Islamic banking and finance is salam. And in a contemporary example of this is the Dubai Islamic Bank sugar financing product, where the bank purchases sugar from a mill and then sells it on a parallel salam or salam contract to corporates. This is an example of salam. Initially, salam was impermissible, and the Sahaba radiallahu ta'ala anhum, may Allah be pleased with them, then requested Rasulullah sallallahu alaihi wasallam to say, we plant our crops, but the buyers come early to buy them. We can't sell them because the produce is not ready, and we need the funds. So then on that basis of need and necessity, Rasulullah sallallahu alaihi wasallam then allowed an Islamic forward sale. And an Islamic forward sale, another example of this is in today's times we have what is called drop shipping or e-commerce, where a person registers for an online shop and he sells products which doesn't belong to him. This is an example of an Islamic forward sale. However, there are certain conditions, all in 7 conditions that must be fulfilled, and basically the products need to be specified, etc., in order for one to conduct a valid Islamic forward sale. Next slide. This is an example of a salam. As you can see, the Islamic bank purchases from the client or producer, which is the mill, and then sells on a parallel salam contract to the final buyer. Next slide. A very similar concept to salam is istisna. Istisna refers to a contract executed to produce an asset. So istisna could be used for off-plan sales of assets. For example, a developer wants to sell units, real estate, that they can use the istisna concept to sell off-plan units. Next example. So the next concept is takaful. Takaful refers to Islamic mutual indemnification, and it is quite a rapidly growing industry. And in Malaysia, for example, the penetration rate is approximately 30%, and it is only growing. Next slide. So Islamic mutual indemnification basically refers to where all the parties, similar to like a co-op, mutually indemnify each other, where they contribute, and in the event that there's any loss event, then the parties all pool their funds together to bail out the person who has lost. Next slide. So essentially, conventional insurance is prohibited on 3 bases. One is that there is riba. The second is that there is an element of farar or uncertainty, and the third is basically on the basis that there is a level of qimar. If you look at this diagram, there's a difference between a takaful company and conventional insurance. You find out that the funds are segregated, and they're not co-mingled in a takaful company. And all the funds are then invested into only Sharia compliant stocks. In conventional insurance, all the funds are co-mingled, and the funds could be invested into non-compliant stocks and investments. Next slide. I would like to quickly provide an introduction to Sukuk or Islamic bonds. Essentially, an Islamic bond, it refers to certificated financial instruments. It is a growing industry that is worth several $1 billion, and there is a huge opportunity in terms of corporates and also in terms of SMEs issuing what is called mini Sukuks. Next slide. Some of the main Sharia guidelines around Sukuk include ensuring that the prospectus is Sharia compliant, that the income received is delivered from direct assets. They can't be, the returns have to be specified, and the underlying activities have to be Sharia compliant, etc. Next slide. So this represents the differences between Sukuk and conventional instruments. As you can see with Sukuk refers to, it represents an ownership at the underlying asset. Maturity of the Sukuk corresponds to the term, and the prospectus is Sharia compliant, etc. If you look at a conventional debt instrument, it's basically a debt obligation, and the underlying asset does not necessarily have to be Sharia compliant. The prospectus also not screened for Sharia compliance. We now move over to the second last slide, common pitfalls that relate to Muslim businesses. Some of the most common pitfalls that we have noticed include the following. Allah subhanahu wa ta'ala says in the Quran, وَالصُّلْحُ خَيْرٌ, that when there is a dispute, when there is an argument, to make sulah and to resolve one's issues internally through sulah is the best. Unfortunately, we find many parties, disputing parties, litigating parties, They spend millions and millions of dollars in the courts without any resolution. All of that money gets wasted, and it is a waste of time and effort and resources. And the best method for that is to have what is called a med-arb clause. So in other words, that is mediation, arbitration between the parties. And in that, alhamdulillah, we as ulama and scholars involved in the field, we offer the service where if there is a dispute, both the parties, they agree to our terms and conditions, and we then, free of charge, resolve their dispute. The other issue is in terms of a partnership, that is, two parties intend to engage into a business deal. Say, for example, one party is the entrepreneur, the other party has the funds. So the party with the funds does not have a deal, he does not have the requisite networks to arrange for such deals, but the entrepreneur has the networks, he has the parties to whom he can contract with, but he doesn't have the funds. So both of them pull the resources together to engage in a business deal. So how should it be done? So there are two ways of it being done. One is it could be done on an equity basis, like either musharaka or mudaraba, or it could be done on a murabaha basis. So where, for example, let's say one party purchases a vehicle and he knows that he can sell the vehicle for a good profit. So in other words, what will happen is the financier can then purchase the vehicle and then sell it to the partner for a fixed markup. So whether or not he makes a higher profit or not, it doesn't matter, but it becomes clarified. This, I feel, as a self-liquidating method of partnership where it is done on a murabaha basis, is one of the best methods, because then there is no disputes. The third point is in terms of employment. We find that many of our employers, unfortunately, the complaint is that, they don't treat their workers well, or they don't treat the employees well. Remember that there are very clear hadith warning employers that don't pay, or pay your employee before his sweat dries up. So imagine now that this is very clear and specific guidance from the hadith to promote the rights of employees. And lastly, I would say that what we've seen is that unfortunately many people get involved in business, but they don't have proper documentation. Addar radiallahu ta'ala, a sahabi of Rasulullah sallallahu alaihi wasallam, once bought a slave from Rasulullah sallallahu alaihi wasallam. Then Rasulullah sallallahu alaihi wasallam told him that record the transaction, that la da'a wa la khibtata, that this slave does not have any defects. So Addar radiallahu ta'ala said that how is it possible that the Nabi of Allah would sell me a defective slave? So Rasulullah sallallahu alaihi wasallam then said, no, record this transaction. That shows us the importance of ensuring that our dealings are all documented and recorded. Another important point, and as I've alluded to this, is Ya ayyuhalladhina amanu idha tadayantum bidayn. When you have a debt, then document the debt. So in that ayat of the Quran, the Mufassirin mentioned now that it is preferable to record one's financial dealings. In fact, in today, I say that it is wajib or fard for a person to document his financial dealings, so that there is no disputes going forward. So with that, we would like to terminate the first segment of this discourse, and to make dua that Allah subhanahu wa ta'ala accepts the efforts of TAIF in terms of promoting Sharia compliance, etc. We'll now proceed to the next segment of the discourse, which is in terms of any questions and answers. And before we move to that section, just a quick explanation on riba and interest. I had mentioned at the beginning of this discourse, and I quoted the verse of Allah subhanahu wa ta'ala, Ya ayyuhalladhina amanu taqullaha wa dharu ma baqiya min riba in kuntum mu'minin. That, oh, you have iman, fear Allah subhanahu wa ta'ala and stay away from riba. In another ayat, Allah subhanahu wa ta'ala discusses that person who engages in riba as such a person, فَأْذَنُوا بِحَرْبٍ مِّنَ اللَّهِ وَرَسُولِهِ. That person should declare war from Allah and His Rasul. So how can a person who is engaged in riba and interest transactions be successful in a war against Allah and His Rasul? So this shows the clear impermissibility and prohibition of riba and interest. So with that, we terminate the first topic segment of today's discussion. I will now move over to the question and answer segment.
Yeah, Sheikh, there is one question, like a practical question from somebody. That during our business transactions, is there a way we can identify riba? Like during our business interactions, several occasions, we are a bit confused whether the transaction that we are dealing with or type of transaction that we are dealing with, whether it is riba or not. So can you identify some or highlight some options or a measure that we can identify whether there is a riba, or how can we find riba?
Very good question. And so generally there are two forms of, identifying, usurious transactions. The first is if there is anything fixed in terms of the transaction when it is a partnership agreement, for example. So let's say if two parties pool their funds together and there's a fixed number, then this is riba and interest. Secondly is that if in the contractual arrangement that there is a fixed sum over and above a loan, then that will also be a usurious transaction. There are also other subtle forms of riba and interest where there are additional benefits in the form of conditions, etc., over and above, the contractual arrangement that will make the make the contract non-compliant. And a quick example of this comes to mind is that just to show the taqwa and the fear of Allah subhanahu wa ta'ala that our pious scholars or predecessors had. There was once a person, whom Imam Abu Hanifa rahimahullah, the great scholar of the Hanafi madhab and school of thought, had lent money. And he was walking along with this person, and when he was about to come past that individual's shop, he immediately moved over and started walking onto the street in the heat. And this person, said to him, but why don't you want to walk under the shade of my shop? So Imam Abu Hanifa rahimahullah replied to say that I feared that because I had lent you money, that I would take an additional benefit, although intangible, and that will also form part of interest and riba. So you can see that the taqwa and the fear of Allah subhanahu wa ta'ala that our pious predecessors had when it came to these issues. Obviously, one is not required to go to that extent, but one can see that the least we can do is ensure that our dealings are Sharia compliant and they don't have riba and interest. And if one has any confusion with regards to that, then one can always approach a reputed Sharia scholar, an advisor, a scholar of the local community, and seek advice with regards to these things.
There is one question which says, please share your opinion about the current growth of halal industry. We see halal everywhere: food, fashion, travel, pharmacy. So many of the brothers and sisters start looking for businesses. So what's your view?
Yeah. So the halal industry is not only, it does not only refer to Islamic finance. It refers to different subsects of the Islamic economy. So you have, halal food and beverages, you have halal travel, you have halal cosmetics. There are different other forms of, the entire halal economy. So when we talk of Sharia compliance, we're not talking only of Sharia compliance in financial dealings. We're talking of Sharia compliance in all the aspects of the halal economy. So there is a huge opportunity when it comes to the halal economy. And what I would advise is two things. One is that, look at the gap in terms of, certain halal food, certain halal cosmetics, modest fashion, etc., where, producers, manufacturers, importers, exporters can exploit certain markets, that are dominated by Muslims. So this is called the science of gapology. That is, in other words, how do you find the gap or the niche in terms of where you can then sell your products? That's the first thing. The second thing is that there's a huge opportunity when it comes to technology and fintech, etc., where the entire world, obviously because of COVID, digital disruption has been elevated. to the next level. So in terms of how you can get involved in the digital space to offer, halal products, etc. So there is a huge opportunity with regards to that also. So, and obviously, one should seek capital. One can seek capital, from private sources, like creating a private equity fund. I know of certain individuals now that have developed, a covert Sharia opportunities fund, where they know that there's going to be certain, businesses that have, the capacity to be scaled up quite dramatically, and where there would be opportunities now that they would come onto the market, etc., where they can then capitalize on those opportunities. So we as Muslims, we should be forward thinking, and we should strive to be excellent in whatever we do. And this is where the hadith of Rasulullah says, "Man amila shay'an falyutqinhu," that a person who does anything, he should be professional, should be proficient with regards to it. So, there would be various opportunities, and now is the time where individuals should seriously look at getting involved, in terms of digitization, in terms of technology, etc. Alhamdulillah, also our brothers at TAIF, have good, skills and capabilities with regards to these things, and you're welcome to consult them also with regards to it.
Thank you very much, Sheikh. Sheikh, there is another question from Ismail. He says the modern day joint venture with banks concern per se that the valuation between both parties don't align. How can it be resolved?
So when it comes to conducting a JV or a joint venture, remember that both the parties up front need to be aligned. And this is where generally, as part of our services, that when we bring both parties together, especially when you're doing a merger and acquisition, etc., one of the key questions you need to find out, as being an investment banker, is to find out what is the synergies between both the parties, and how would the vision and mission of both the parties align together. And if there's no synergy, and you are simply merging one company with another company, for example, or you're doing a JV, then it's not going to work. Generally, what we found now is that where there are complementary skill sets, then those JVs work. So one person, for example, has the skill, the other person has the finance. So then generally those JVs work out. With regards to a specific question around a JV with the bank, and then that JV needs to be realigned, what we would suggest is that you then be open and frank with the bank in terms of what your requirements are, what your vision is. Sometimes these discussions are not done, and it creates all sorts of problems. So the best is to be open, to be transparent, to have those discussions, and then to find solutions and move forward.
Thank you very much, Sheikh. Many people keep sending questions. Let me have a look. We will select, we apologize, we will not be able to take all the questions. So things which are similar, we might skip, and then there is one specific question, Sheikh, from Baizid. This question is, in South Africa, some of the Sharia compliant unit trusts donate riba money to foundations for charity. Can those charities loan out that money in the form of Qard Hasan?
Very good question. Obviously, that what is called the purified income of Islamic banks unit trusts sometimes can reach in the billions of rands. I know personally of a charitable trust that has over 200 million rands, which is close to over $10 million only in purified income. So obviously, from a Sharia perspective, those funds would then have to be dispensed off into charity without the intention of reward. So the strict ruling with regards to this is that the funds have to be dispensed off in charity. So there could be different methods of how this could be done, and one methodology or process that could be effected is where the funds are dispensed off to a particular sub-charity or a charity that then provides Qard Hasan or Islamic microfinancing loans to the public, who can then be able to then organize themselves under certain businesses, etc. So that would be a good initiative, and that is a proposal that should be put forth to some of these charities, so that businesses are then created and there's more value creation.
Okay, Sheikh, one question, while the questions keep coming in, one question that I would like to ask you, is like, Sharia, doing the business Sharia compliant way is mandatory on the faithful. So as a Muslim, when we are a Muslim, it's mandatory for us to do our businesses in the Sharia compliant way. What is the economic justification if we say that this is an alternative solution for the whole world? So what is the economic justification? How do we justify economically the elimination of riba or the Sharia guidance for those of our colleagues who are not necessarily Muslim? So how do we offer this solution as a global solution?
So, very good question, brothers. Yeah, and I think this is something which requires a lot more research, feasibility studies, etc. But basically, I would like to address your question in three parts. The first is that from a marketing and branding perspective, we don't necessarily need to brand Sharia compliant products as being Islamic or Sharia compliant. We can brand those products as ethical products, similar to what you have like ESG products, etc. Like you have in the Republic of Turkey, where Islamic banking is officially called participatory banking, or you have in other jurisdictions where it's called ethical banking. So from that perspective, it doesn't create or spook non-Muslim investors or investors who feel that these products are too complicated and they don't understand the products because enough education hasn't been done. So that's the first part in terms of marketing branding. Secondly, in terms of education, I feel that there's still a lot more required in terms of education, especially at the lower end of the market or at grassroots level. There are a lot of Islamic causes, etc., out there that are targeting sort of the middle to upper income classes. But there is no marketing at grassroots level where at masajid, at Islamic religious gatherings, etc., where thousands of people are then educated around Islamic banking and finance and how they need to be Sharia compliant. And this is an extremely important factor in terms of how we propagate Islamic finance and banking en masse. That's the second point. The third point is that what needs to happen is that you have a very disunited or dismembered, if that's the correct word to put it, supply chain when it comes to the Islamic economy. What we need to do is we need to create a unified supply chain when it comes to the halal economy, when it comes to Islamic finance and banking, so that we can create these strong supply chain or strong halal ecosystems that can then be unified and digitized for the global benefit of the Ummah. And this, I feel, is a very worthy cause, and individuals should look at how they can, put themselves under different, groups, etc., so that they can then, provide the benefit to the Ummah.
Thank you very much, Sheikh. There are several questions relating to the differentiation between halal and haram and dealing with halal industry. I will take only one of it and then maybe request your, because most of them are related. Is there a Sharia acceptance formula that becomes standard to define which transaction is halal and which is haram? And that will apply. And this is a question from one of our colleagues, Budiman. If I am pronouncing the name correctly, please forgive me if my pronunciation is wrong. Budiman Indra Jaya. This is the question from them, from him. And similar questions are from Afrad Arfin and Eddie Tree Sujar Wadi. Similar, that Sharia compliant, how do we Sharia compliant? Afrad Arfin suggested that should there be a global Sharia board because there are differences in fatwa of different shuyukhs relating to halal industry. So what should be the key criteria for differentiating between halal and haram when dealing with the transactions and products?
Yes. So basically, there's a hadith which says, "Ikhtilaf ummati rahmatun," that the ikhtilaf and the differences of opinion amongst my ummah and my community as per the hadith of Rasulullah is that this will be a form of rahmah and mercy. So there will always be differences of opinion amongst the scholars. What we do need, however, is we need some unification and standardization, and I do believe that the likes of IOFI, IFSP, and IIFM have put forth a very worthy formulation of standards that at least serve as a basis for further development and growth. And in terms of having a unified Sharia board, this is also a very worthy cause, like you have in an example of Malaysia, for example, where the central bank has a central Sharia board that then governs all other Sharia boards. This is important because there's a level of externalization from an auditing perspective to ensure that the products are also Sharia compliant. You can't have a case where scholars or individuals as Sharia board members are then sort of marking their own homework. Who is there to ensure that those products that they say are Sharia compliant are in actual fact Sharia compliant? We've done many Sharia audits in the past. We've realized now and seen that something is Sharia compliant at the front end, but at the back end it's not Sharia compliant. So we need to ensure that there is a level of external Sharia audits that are conducted to ensure that what we do put out there is Sharia compliant. So this is also a worthy cause. In terms of some of the guidelines around contracts being Sharia compliant or not, there is a lot of guidance out there. However, these things are generally left up to the scholars because some of these things can be intricate and sophisticated to ensure that not only is the concept Sharia compliant. I always say that there are three things to make sure that a product is Sharia compliant. The first is that the concept is Sharia compliant, so you can have a musharaka, Madaraba, etc. And secondly is also that the terms and conditions have to be Sharia. So who has reviewed the documentation to make sure that that product is Sharia compliant? And thirdly is that are there Sharia audits, whether internal or external, that are conducted to ensure that these products are 100% Sharia compliant. So this is extremely important for us to ensure that there is a level of external audits that are conducted to ensure that the products are Sharia compliant.
Thank you, Sheikh. There is one question I think we will take it as the last question is there riba in a country where there is war and insurgency? Does war and insurgency in a country give any exceptional situation or exceptions for riba?
So obviously, when it comes to riba, there are three conditions, where Sharia allows for riba to be permitted, where what is called the Darul Harb. And there are three conditions. And generally in today's times, those three conditions are not met. Only under very specific scenarios, those conditions are met. And there are three conditions which all of the ulama have agreed upon. And, if one feels that, one is really in Darul Harb, for example, non-Muslim state, etc., that is antagonistic towards Muslims, etc., then only in that case would riba be permitted. Otherwise, riba would be impermitted. Even if there is war in a particular country, one should seek proper guidance of the local ulama to ensure that it is in fact classified as Darul Harb, and therefore, hence riba would be permissible only in that specific scenario.
Okay. And there is another question, I think that should be last year, is like about the terms not disclosed clearly in different contracts. So normally contracts are small font, several pages. So what is your view about that? I think it need to be transparent, right? And then we should go through them and make sure that they cover everything we understand. Your views, Sheikh.
So definitely, look, I think there are specific guidelines from a marketing perspective in particular jurisdictions around how product documentation should be presented to clients, etc. Obviously, those should be followed. And together with that, the reality is that Islamic banks, financial institutions should be very clear and transparent in terms of the terms and conditions. They should also read those terms and conditions out to the clients. Sometimes you find that there is no proper guidance around what differentiates a conventional between an Islamic product. The client is simply signing over documents. What should happen is there should be more education. Explain to the client why this product is different from the other product. This is extremely important. So I feel that, a lot more should be done around that. And, this all reverts back to what I mentioned previously, is that there should be a lot more education around Sharia compliant banking products.
And I believe, Sheikh, this will be applicable not only for the banks, this will be applicable to Islamic Muslim Sharia compliant businesses as well. So if we own a business and we are dealing with our customers, we should also be transparent, and the terms should be clearly explained and identified as you right? So,
Yes, that's correct.
Okay, thank you very much, Sheikh, and thank you very much, everybody. If any of the questions are not answered now, we will make sure that we take your questions to Sheikh, and we have your contact details, and we will get you answers from Sheikh.